Alright, hey everybody, it's Elysium again with another video lesson. This is going to be the first time going into a proper, I guess we'll call it an in-depth strategy. This is one of my favorite strategies, especially for kind of longer term trades, swing trades. These are really good still for even just your day trades. It really depends on the specific setup, the amount of volume, a whole bunch of different factors, but I'm going to go into this one a lot, and this is the multi-day breakout. Now, breakouts, many of you know, essentially it's just when you're breaking out over a previous resistance level and you get an upwards move because you're breaking out over a resistance level. Now, the multi-day breakout is basically that, but what you're looking for is a fail to break out followed by multiple days of consolidation sort of near the highs. Doesn't need to be exact. You can have red days in between. In fact, a lot of the time the more red days in between, the stronger the breakout. It really depends on exactly how it plays out. And sometimes just 2 or 3 days in between is enough to give that multi-day breakout move. So I'm going to go through a few different charts just to show that sort of how this can play out, how strong these moves can be, and sort of a bit of an explanation of how you should be trading them. So I'm going to go through this particular chart to start with because this is one that's been obviously on a lot of people's minds recently. Bed Bath & Beyond, BBBY, it's a meme stock essentially, but you don't need to pay attention to the fact that it's a meme stock. You can just let the chart tell the story. I'll say that quite a lot throughout these lessons because, a lot of people like to trade on fundamentals and indicators and whatever else. But to me, you can let the chart tell the story. The chart is the primary thing that you should always be paying attention to when you're actually trying to find a trade. So I'm going to zoom in on this chart because, as you can see, this is spiked all the way up to $30 in the last couple of weeks. But you can see sort of the humble beginnings of this breakout here. And the first multi-day breakout setup we had. So what you're looking for in a multi-day breakout is you're looking for a ramp up towards a previous resistance level, like over here, a failure to go through that resistance level, followed by some sort of days of pullback. So you had this attempted spike up to this high here, and it failed, followed by a slow consolidation back up to this high. And as you can see, when it finally broke out above these two resistance levels, it launched. Now you'll see this pretty typically in a lot of these multi-day breakout setups. So you can see that there was a little bit of a volume spike on this day where it failed down here, a bit more volume than these other average trading days. That's the kind of thing you're looking for. You're looking for a rejection with some sort of decent volume just to show that it's really establishing a lot of short sellers. Because what you're looking for in these multi-day breakout setups is really a short squeeze, which essentially means you have a lot of people who are trying to short, they're trying to bet against this stock, they're trying to push the price down, and they get stuck in these situations where it breaks out over where they expect the top to be, where they're trying to push the price down, and they get forced into covering their positions, which means buying back those shares, which causes these huge upwards moves as they have to cover their positions and buy all these shares back. So you have people buying as well as these shorts who are covering their position, causing these really large buying sort of cascades and driving the price up significantly. So this is a multi-day breakout short squeeze. This is what you're looking for, these types of setups. Now, a lot of the time, what you're looking for, especially in these multi-day breakout setups, is companies that have been pretty heavily shorted, which is why these meme stocks are a good place to look for these type of setups as well. But there are plenty of, overly shorted companies, and it doesn't need to be, have a huge amount of short interest. There's a lot of people who get overly aggressive, especially when you see this kind of move. Now, this is why these moves are so effective on the multi-day level, because after seeing this rejection, you see short sellers start to get over-aggressive. They start to short even more and more and more, thinking that the price will continue to go lower on these downtrending stocks. But instead, as the price begins to wind back up towards this resistance level and it breaks through, you start to see these short sellers panic, driving this price up. So I'm going to go into a little bit closer time frames just so you can have a bit of an idea of how to actually trade something like this. Sorry, just getting all the way back here. Okay. So this is 5-minute candles, just to give you a bit of an idea of how you could trade this actually on the day. So as you can see, this was this previous resistance level here, it failed, and all the way back here where you had this larger volume candle. So this is again what you're looking for. I've talked about this before, where you're looking for your supports and resistances. You want to look for the highest volume candles and where it got rejected or bounced from with these highest volume candles to establish your resistances and support. So you can see there's a pretty big volume spike where it failed to break through, where the short sellers really held this price down. And you can see a similar thing here. There was a decent amount of volume on this day where it just failed to get out. Obviously there wasn't enough volume to push it through, so it just failed and faded back down. But it didn't go down anywhere near as much as this day. There was a pretty consistent day of volume and it just sort of chopped around. Now, these are blue and yellow bars on my TradingView chart here to indicate pre-market and after hours price. So you got your after hours and your pre-market. So this is, not during the standard trading hours. This is during, 4 a.m. to 9:30 a.m. where it started to move up towards this high. Now, you can see here that it actually did break out above this level here very temporarily, but there was very little volume. And I've told you before that you don't really want to pay attention to a lot of these moves and noise when there isn't significant relative volume, because that's how you get fake outs, manipulation, things like this. So if you were trying to buy this breakout here, you would have been stopped out. You would have had to get rid of this position because you would have been buying here and then suddenly, you're gone. And that's because you didn't wait for the market open, wait for the significant retest of this level here, and that's where you should be trying to buy the breakout. So you can see it dipped back down here, failed breakout, and then moved back up right before the market opened, and we had this candle here where it opened right here. So for those who don't know, this level here means this is where the candle actually opened. So this is where it opened at market open. So it actually gapped up a little bit above the breakout level. And you'll find most of the time with these setups, they're not perfect breakouts. You don't just have them break out and just go forever. That's pretty hard to get in on for starters because you don't know how aggressively it'll fail. You don't get a sort of confirmation, as I like to call it, where you're seeing that this previous resistance has become support. That's what you're looking for. So this was a really great breakout. It came down, it tested this breakout level right to the penny, and then began to launch upwards, confirming this breakout. So what you should be doing is waiting for this test, waiting to see that it doesn't immediately just fail back below this level like it did here and continue lower. Because a lot of the time you will see these failed breakouts where there's just a stop loss hunt of people who are shorting and then it just continues lower. So what you're looking for is a confirmation that the buyers are now here and that they're going to hold this price up and drive it higher. So you can be entering anywhere as the price begins to bounce from this level, depending on your personal risk reward. And as you can see, this ended up breaking out pretty significantly over the course of the day. So we got a 25% move over basically an hour. So that's a pretty significant move pretty quickly. I wouldn't be holding this kind of breakout for this amount of time. I'd probably be taking profit in the 10, 15, 20 mark. It really depends on how you want to play it yourself. Some people like to swing these ideas because a lot of the time these multi-day breakouts do run for multiple days. So depending on how patient you are, depending on your risk tolerance, your position size, all that kind of stuff, you can try to do these plays over multiple days, whereas a lot of the strategies I'll go through, I don't recommend trying to swing over multiple days. But the multi-day breakout is a pretty good one to potentially swing over multiple days. So I'll zoom back out again and give you an idea of why you don't need to hold these positions in the first place, because a lot of the time these multi-day breakout setups reoccur in the same stock within short periods of time. So as you can see, we had this breakout and then a huge gap up, continued up, this squeeze basically all night. This is one of those heavily shorted companies. Wall Street's bets obviously getting on it. Reddit crowd starting to push the price higher, really squeezing the shorts and driving this price up. We hit buyer exhaustion at this kind of 13.35 level and began to fade back down. We had these red days here, and just like before, we had this exact same type of thing, just to a more extreme level because the price has moved up, where the breakout came down, we got this new resistance level where it had this daily top out, moved down, consolidated, and started to ramp back up. So several days, this is your multi-day, moving back up to this resistance level and did the exact same thing. We had another multi-day breakout. So you don't need to be trying to hold through a lot of these types of moves, right? You can wait for the chart to start painting another multi-day breakout or a different setup, whatever it might be, and then you can try and buy the break again, and you can do the same thing. So as you can see, this has gone from here again, another significant breakout from this level, 100+% before it's topped out near the $30 range. So this is a basic multi-day breakout setup that's happened multiple times. You will see this in quite a few charts, especially ones with lots of short interest. So this is a good one to look at. So I'll go through a couple more charts that have some multi-day breakouts as well, just so you can see a few more examples. So we have G-Box here. Now this is a similar type thing. You see we had this bit of a ramp up here, pretty big green day after all of this just chop and nothingness, where it topped out after a significant green day. So that's a lot of the time what you're looking for, is a decent green day that tops out somewhere and then consolidation that steadily ramps back up towards that high. And that's when you need to start watching these things. Now this one was a bit harder because the actual retest of this particular chart happened during pre-market hours, so you would have actually had to be trading in the pre-market. As you can see, this is where it actually broke out. You have this volume spike here where it broke, did the retest, and then moved up higher. But you could have just been patient. If you were happy to not be perfect, which you don't need to be, you can see that this retested here. You can wait for this pullback right into the morning dip, and you could have been buying around here because you're still not risking, you're risking, say, 8 cents for the potential upside of, 20, 30, 40, depending on what your risk-reward ratio is. So these are the kind of things that you can still be buying, waiting for this morning dip, waiting for it to get as close to this as possible. And if you miss it, it doesn't matter. Wait for the next play. There's always going to be more opportunities like this. So this is another classic multi-day breakout pattern. This was, again, heavily shorted, had this big short squeeze all the way up until the 280s. So, 100% gain over the course of a day, just squeezing from this multi-day breakout setup. Couple more. Another pretty simple one. This one has a bit more pullback, but you can see that the concept is still the same. It doesn't really matter exactly where the price goes. It's just that it starts to ramp up after multiple red days and starts to push back up to these resistance levels. So you can see this had a pretty clear resistance from, all the way back here. These failed days after some nice green volume day where it failed to get too much higher, sort of started to consolidate and move down and then push back up towards this high. And as you had that, again, you had this multi-day breakout where it ran for several days after breaking out over this resistance level. Now, some of these charts can be a bit more choppy. It still doesn't matter. I mean, the concept will continue to be the same. you get better at looking for these things as you start to see these sort of volume spikes, which is what you're looking for in these type of things. You can see that this topped out and had a really big pullback, and then consolidated for, you know, weeks, and then it started pushing up, and then you still had this breakout. Now this is not a huge breakout, but you're still getting, you know, 10-20%. And then you had a very similar thing down here where it tried to break out on this high volume day, couldn't do it, tried again, couldn't do it, consolidation near the highs, push through, breakout. This is a less clean chart, but the concept is still the same. As you start to see these kind of setups of the failed breaks, ramping up and pushing out, you can start to grab those breakouts on the retest. So you can see here it had this wick down where it retested and then launched. That's the kind of setup you're looking for. BCAB, another more recent one here. Very similar thing, had this move up, push up. This actually happened over the course of the intraday. Let's see if I can get in here a bit closer on this one. So you had these highs here with the high volume, started to push back up, kind of struggled around the area, but you had this little retest here. You even had sort of a second retest, but you had this retest where it didn't ever dip back below this breakout level, and then it pushed up significantly from there. So you had these little spikes, failed spikes, consolidation, and then it moved up, and this is where we had the breakout here with the retest, and then the push up. Same thing down here. You can see that we had the push up towards this previous resistance level, push up, breakout after multiple days of consolidation, ramping up in volume towards this level here, and then you had your significant squeeze. So you're looking for things like this. So you had this larger red candle here with a bit more volume, another retest of that, and then the breakout. So you're looking for multiple days of consolidation. It doesn't matter, it can be weeks, it can be days, but you're looking for it to start pushing up to it towards that level and breaking through. Don't try and anticipate these things because you don't know when the breakout's actually going to happen. You don't want to be, you know, buying it here and then it dropping down. Wait for the confirmation because you don't want to be stuck taking losses. You'll have, if anything, as I'll go into another video, this is kind of area you want to be shorting. If it's just going up towards the resistance and not breaking through and retesting, these kind of things you can short instead because you're shorting into a major resistance. You're shorting the resistance level, which is a much higher win rate than trying to long before you get your confirmations. Don't try and do that. Wait for the confirmations. Wait for it to break through and give you that clean looking chart where it's breaking through a major resistance and giving you this nice multi-day breakout move. You know, you'll find as you start recording and journaling your trades how often these, you know, breakouts run for multiple days, and if you choose to hold for multiple days, I still suggest taking some profits along the way, paying yourself, so that if some sort of major failure happens, you know, you're not stuck holding a large position, not stuck giving away a lot of your profits. So it's good to just make sure that you're still locking in profits, as I mentioned before in a previous lesson, making sure that you're, you know, being smart about locking in some gains just for your own mental health, you know, especially if you're holding these overnight and you can't watch straight from 4 a.m. or whatever it is, because sometimes there's these huge downward moves on failed breakout when a lot of the market makers start moving price around in the early AMs while everyone's sleeping. So I suggest taking profits on these moves during the day when there's the highest volume, locking in some gains, and just making sure that you're staying safe on these multi-day breakout plays. So that's basically it for multi-day breakouts. They're pretty straightforward. You just need to start practicing identifying these type of chart setups where you're seeing these multi-day breakouts. And once you start being able to identify these multi-day breakouts, you should be able to start playing them intraday. Don't be greedy with them, you know, don't chase them either. You know, you don't want to be buying like all the way up here just because they can run for multiple days. Your win rate will go down and down the more you chase these. These setups will occur often enough that you don't need to be forcing the trades. Wait for those perfect setups where you get those back tests. You can get a solid entry near the new support level where the resistance is broken, and that way you can keep your risk reward levels high and your win rate high, and you'll be consistently profitable with these types of plays. So that's the multi-day breakout. It's a very typical, pretty easy play to look out for, and I hope you guys have some luck using this one.